to preserve great moments in life. And this is made easier when trusted hands lead the way, opening doors so we can venture out to explore possibilities, refusing to believe the undoable, but always embracing the unthinkable. Inspired thinkers always glued to the possibilities of great futures, embracing challenges with admired hope. A group of good people ready to give you a push as they create, build, and support platforms that steady our feet. Because we believe in new creations that are embraced by all, and changes that make life much easier to handle. This wonderful change is meant to connect our futures. Because we understand in life, the things that you desire the most are within reach when we unlock possibilities for you to do great things every day. Call us today on 0711 065 100.
Have you ever thought about the word mutual? Mutual respect, mutual admiration, mutual interests, mutual benefits. It's a little word with big meaning because it describes a state of commonality, of shared experiences or beliefs, and of close relationships. For us at Old Mutual, the word mutual is much more than just a part of our name. It's a promise we make to those we serve. Through our core business activities of gathering capital, investing it on behalf of our customers, and transferring risk, we are working to create a more socially inclusive, resource-efficient, and low-carbon future for all our stakeholders. And it's this that makes us the first choice financial partner for millions of Africans. We understand what is important to people and businesses on the continent and what challenges they face. And they trust us to help them overcome those challenges, protect what is important, and transform their dreams into reality, while constantly evolving how we deliver on our purpose and keep our promises. The reason why we do it is the same today as it was almost 2 centuries ago: to become our customers' first choice to sustain, grow, and protect their prosperity by offering a range of integrated financial services that truly meet the needs of our customers throughout their lifetime, enabling entrepreneurship, embracing diversity and inclusion, supporting financial well-being, and delivering quality education and skills development, so that together we can do great things every day.
We all want to preserve great moments in life. And this is made easier when trusted hands lead the way, opening doors so we can venture out to explore possibilities, refusing to believe the undoable, but always embracing the unthinkable. Inspired thinkers always glued to the possibilities of great futures, embracing challenges with admired hope. A group of good people ready to give you a push as they create, build, and support platforms that steady our feet. Because we believe in new creations that are embraced by all, and changes that make life much easier to handle. This wonderful change is meant to connect our futures. Because we understand in life, the things that you desire the most are within reach when we unlock possibilities for you to do great things every day. Call us today on 0711 065 100.
Have you ever thought about the word mutual? Mutual respect, mutual admiration, mutual interests, mutual benefits. It's a little word with big meaning because it describes a state of commonality, of shared experiences or beliefs, and of close relationships. For us at Old Mutual, the word mutual is much more than just a part of our name. It's a promise we make to those we serve. Through our core business activities of gathering capital, investing it on behalf of our customers, and transferring risk, we are working to create a more socially inclusive, resource-efficient, and low-carbon future for all our stakeholders. And it's this that makes us the first choice financial partner for millions of Africans. We understand what is important to people and businesses on the continent and what challenges they face. And they trust us to help them overcome those challenges, protect what is important, and transform their dreams into reality, while constantly evolving how we deliver on our purpose and keep our promises. The reason why we do it is the same today as it was almost 2 centuries ago: to become our customers' first choice to sustain, grow, and protect their prosperity by offering a range of integrated financial services that truly meet the needs of our customers throughout their lifetime, enabling entrepreneurship, embracing diversity and inclusion, supporting financial well-being, and delivering quality education and skills development, so that together we can do great things every day.
Good morning, everyone. I can see the numbers are still growing. I can see we have 73 participants so far, but I'm sure many more people will be joining us. So good morning to you from wherever you are. What you can do for us is just on the chat box, you can tell us your name and where you are listening from, whether you're in Nairobi, which parts of this country. Maybe you can mention the county, or if you're also streaming in from another country, we'll be happy to host you. So good morning to you, wherever you are. I want to take this opportunity to welcome you to our webinar. This is part of our series of curated sessions. These are mostly demand-driven interventions that are powered by Old Mutual and Wild International that are meant to help SMEs to be able to redesign their business, redesign their decision-making processes so that they're able to manage risk, they're able to mitigate risks and focus on running profitable businesses. In fact, one of the things that I know Old Mutual and Wild are very passionate about is the fact that we want to work with SMEs, but we don't want SMEs to remain small in perpetuity. We want to see these SMEs becoming corporates and multinationals. And in doing so, such curated sessions, such webinars are what is going to help these SMEs get to where they need to get. So welcome to what is promising to be a conversation, a learning opportunity, a growth-oriented session that will help you as an entrepreneur or as a potential entrepreneur to be able to scale the services that you have to offer. We have lined up for you a seasoned speaker who I will tell you more about as we go on. But just before we introduce a couple of people who would like to say something, then we get to our main speaker. I just wanted to set a few ground rules so that we make this session as efficient and as empowering to you as much as possible. So one of the things is that we kindly request that don't feel the urge to turn on your video at the moment. I don't think you'll be able to, but for the sake of just focusing on the learning, because this is more of applied learning, so that you focus on the learning, just listen in. If you have any questions, any burning issues, you have the Q&A button. It's a box with a question mark. So you can click on that and put your question there. If not, you can also chat. You can also put your question on the chat box. I'll be filtering through and ask a couple of those questions. In the meantime, while the presentations are ongoing, you don't need to raise your hand in the event that there's time for you to actually say something. So there's no need for that at the moment. So here, we just want you to strap in. When you have a question, type it in the Q&A or the chat function, and then it'll be able to help you. So as mentioned to you, this is meant to be more of applied learning, whereby we're going to give you solutions that are tantamount to you, the decisions you're going to make today and tomorrow for the sake of scaling your business. As a result, we need the listeners to pay close attention to the learnings that will be shared by our chief speaker, because at the end of it all, we're going to have a surprise for you. There's going to be winners today. There's going to be a couple of free learning sessions that will be shared with you, but I don't want to sell too much at the beginning. But as we go on, I'll tell you more about what these gifts are. So it is indeed a surprise for you. But for once, we are being rewarded for learning as corporates. So welcome to you all. Karibuni sana. So who am I? I know I've not introduced myself. I jumped right into it. My name is Faustina Ninga, and I will be your moderator for the day. I am the lead consultant for medium-sized businesses at Wild International. My colleague, Chris, who happens to be our CEO, will tell you more about Wild International. But what I do as a consultant is that I support small and medium-sized businesses within East Africa or the larger African continent to be able to find their next success story, to be able to perfect their business models so that they may be able to access profits, survive the challenges, survive the risks that are associated with running enterprises in Kenya, and see you smile all the way to the bank. So that is what I do. Yeah, that's me. So to our host, who is Old Mutual, I would like to give this opportunity to Mr. David Madenge. He is the head of bank assurance and alternate channels at Old Mutual. He's going to tell us more about Old Mutual, as well as the SME roundtable, and why we are so passionate about working with SMEs. So over to you, David.
Hi and good morning. I don't know if I'm visible or not, Faustina.
You are visible, but color coordination is not working for you. So I think the team in the background can just try and remove either remove the background on him, or we proceed without a video.
I hope it is better, but yeah. So
yes, that much better.
Yeah. So thanks a lot. Thanks a lot, Faustina, and thanks a lot for all of the participants who've joined today morning. I think first of all, we are very glad to have you here and very excited that you're able to join us and just have this conversation going. And we are also happy to have partnered with Wild International. And as Faustina, you said, you want to see SMEs happy and going as they go to the bank. And basically, that's also our same goal that we do have as Old Mutual. And that's why we came into this partnership with Wild International when we created a new way of interacting with SMEs, what we call the SME Roundtable. We actually launched it on 27th of August. And basically, it was a partnership around how then do we have conversations with the SMEs over and above the solutions that we actually provide. So as you may have known or making you aware, Old Mutual is a 179 years business. We operate in 14 countries in Africa. We serve close to 6.5 million people. And in East Africa, we are currently serving around 2 million people. And as well, we would wish to serve you through the many businesses that we support. So I would want also to mention that Old Mutual as a business is an integrated financial service. I think if you joined in a little bit earlier, you might have seen the round of the video that was going around that we pride as an integrated financial system service. What that means is we want when you walk into the Old Mutual ecosystem, you can be able to get everything. Basically, we want to become like a supermarket. How you get in and you get everything within one roof. I think that's someone else's tagline. But so we are into banking, and basically we are supported by our sister business, which is called Faulu Bank. And largely that's where we will discuss around financing, if you're looking at financing your business. And that's how then we help you as Old Mutual through our sister business, which is Faulu Bank. If you're looking for investments, we have OMIG, which is Old Mutual Investment Group, which is basically does the investments bit for you, your stocks, your shares, and all these things. If you want us to invest into your business and everything else, we are here to help you walk that journey. If you're also looking at protection, we have the life business, the Old Mutual Life business, which I sit in, and we also have the Old Mutual General and Health business. So what we do as Old Mutual, and basically why we are also keen in partnering with SMEs, is become a one-stop shop for you, give you all the solutions that you want, and also partner and walk this journey together. I know we are here to get a lot more, but basically in a nutshell, that's what Old Mutual is all about. Thanks a lot, Faustina, and happy to be here. Let's engage. Good morning.
Thank you so much, David. David has just confirmed the fact that Old Mutual has been doing this for businesses and individuals for over 100 years. My goodness. You're all old, man. You're all old. Yeah. And we love the fact that you continue to empower SMEs, for this long, and you don't tire. As a result, this is why we are here. So now over to Wild International. We have our CEO, Mr. Chris Odongo, who will just tell us a little bit about Wild International and why we decided to make this partnership work. We live in times where politicians say, lazima iwak. So why is this working? Yes, Mr. Chris Odongo, karibu sana.
Thank you very much, Faustina. Can you hear me clearly? Can you I'm saying, can the people?
Yes, we can. Mm-hmm.
Fantastic. It gives me great pleasure, ladies and gentlemen, to join you. My name is Chris Odongo, and I want to kick off things by celebrating each and every one of you here today. You're the dreamers, the doers, the risk takers, and the amazing creators who keep the wheels of our economy turning. As an SME owner, as an entrepreneur, for me, you represent the spirit of resilience, creativity, innovation that shapes our world. When I think about people like Elon Musk, or I think about people like Bill Gates, I'm convinced that you who are in our audience here today are very much on your way to being that person and embody the spirit of innovation, excellence, and entrepreneurship. When you launch a product, when you launch a service, when you hire somebody and create a job, these are the sparks that are driving growth. And in my view, these are the things that are strengthening our communities. And I want you to know that you inspire me and you inspire everyone here at Wild. Even as the month of October passed and we celebrated Mashujaa Day, I always say entrepreneurs are my heroes and they're the heroes for this economy. So congratulations and thank you for joining us on this journey. Let me also acknowledge our partners, Old Mutual, David, for giving us this opportunity to connect with SMEs and to connect with entrepreneurs. We are very passionate about this work, and we are here to invest in the powerful vision for your business. I always congratulate SMEs for taking time away from their business. And this time, again, I can see hundreds of you have taken time away from business to work on your business, and I congratulate you. Today, in partnership with Old Mutual, we are bringing you amazing insights on financial management, and we want you to create a rock-solid foundation for your future. We are definitely going into practical skills. I've had the privilege of sitting and listening to Thomas speak, and he'll be introduced elaborately by our moderator, but I've had the honor of listening to him and learning from him, and I can assure you that you are in for a good treat. At the end of this session, I'm confident that separation of personal and business finances will be easy. You'll have an what it takes to keep clear records. You'll be able to even understand a lot about tax, budgeting, performance management, and obviously, we know that cash is king. And so how do you make sure that you always have cash and you keep your business growing strong? Let me remind you as I close that at Wild, we are here to guide you through complexity so that you can be able to focus on your best. Our business coaches, our strategy consultants are here to serve you and to help you make better decisions so that you can grow and achieve your dreams. But also remember, Old Mutual is equally dedicated and committed to building an ecosystem where SMEs and entrepreneurs like you can thrive. And there is a reason that we have partnered with them and are bringing to you this SME roundtable. We'll keep bringing you tools, we'll keep bringing you expertise, we'll keep bringing you platforms, and we'll keep bringing you amazing things. So, ladies and gentlemen, entrepreneurs, if we're in a room, I would say turn to your neighbor and tell them thank you for coming. Get ready to level up your financial skills and set your stage for a future that's even brighter than me and you can imagine. We're excited, and over to you, Faustina.
Thank you so much for that speech, Chris. I'm also feeling so encouraged. Chris has started by saying, we are the dreamers, we are the doers. I want to add, we are the kings and we are king makers, because as Chris has mentioned, we are on our way to becoming the next Musks, the next Zuckerbergs, the next owners or founders of a Safaricom somewhere. So thank you so much for that speech, Chris. I want to mention that we have people that are streaming in from very far. A lot of us are coming from Nairobi, but we have guys from Geneva. Ian says, welcome, welcome, karibu sana. We have guys from Nigeria. We have others from Uganda. I think, let's just say the whole continent is either watching the US elections or they're here. So those who are here are now the kingmakers. The others, well, we don't know, but we'll see. So welcome, welcome guys from wherever you are. So I want to take this opportunity just to give us a reminder of why we chose to come for this particular session, right? When you look at an organization like Old Mutual doing such kinds of interventions on behalf of SMEs in partnership with Wild International, this is because as kings and kingmakers, we run businesses in environments that are faced with a lot of risk. And one of the biggest risk component is in our decision making, how we manage our cash. You know, as SMEs, there's always that assumption that, well, I don't have much assets, so risk is not an area of concern. But let me tell you, irrespective of how small you think those assets are, anything that happens, one simple lawsuit from your employee can change the tide for you. When it comes to being the king that you want to become. This is because this affects your physical assets. It affects your cash assets. This can dilute your business. And overnight, you stop being an entrepreneur and you become, what used to be. They start referring to your business in past tense. And a lot of this, as I have said, is anchored in your financial decision-making skills. And as a result, we decided it's best to bring the experts, those who've journeyed with SMEs for years. And therefore, we have Thomas. Thomas is somebody that I have known for a while now. Thomas is somebody that has taught me. Thomas is one of the most seasoned financial experts that I have met. Thomas is one of the few people that I've seen who can come to the level of an SME, teaching you the basics of financials, okay? The prudence related to financial management, decision making. When Chris says cash is king, sometimes we don't really understand what cash is king. Yes, I have cash and all I do is pay expenses. So are you in business to generate invoices, or are you in business to make money? Thomas is that kind of person who can help you be able to separate the trees from the forest when it comes to financial management as an SME. And therefore, in introducing Thomas, I will read his bio so that I do not dilute his prowess. Yeah. And so, who is this Thomas guy that I work with here at the Sandbox? Thomas is the co-founder and the principal partner of Probity Consult Limited. He is an accountant. He's been a consultant and has been providing accounting and finance solutions for businesses for many, I think it's over 20 years, if I'm not wrong. So he offers outsourced accounting services and accounting systems automation, helping businesses maintain proper accounting records and use their financial information to make the right decisions. Okay? Making the right decisions. You can have information, but you still don't make right decisions. It's possible, and Thomas will show us how. So Thomas works with entrepreneurs to guide them in understanding financial aspects of their businesses. He has assisted many organizations in creating accounting processes, systems, timely data for compliance and decision making. He is passionate about SMEs. He is passionate about accounting, and most importantly, he's more passionate about making you see the profits. So I want to take this opportunity to officially welcome Thomas. He's going to be our chief speaker for the day. Then lastly, so that I give Thomas a chance, a reminder that there's gonna be a trivia and there's gonna be gifts. So please pay close attention. In between the session, we might ask a question and a random winner will be given a beautiful gift hamper. I'll give you the details of how you're going to share your responses. So even if you're not in the country, we will find a way to compensate you, all right? Yeah, so with that, Thomas, over to you. Please take over and teach us finance.
Thank you, Faustina, for that amazing intro. Allow me to share my screen so that then we can work together on this. I think you can see my screen now. Thank you. Thank you, Faustina, once again for the introduction. Today we are actually going to walk through what are some of the essentials of financial management for small and medium enterprises. When we look at businesses at the size and the level at which we work with, challenges come in this area, but today we are going to demystify some of the things in this and see how then we can better manage our businesses. As Faustina introduced me, I am from Probity Consult. We are an accounting consultancy, and we basically support SMEs. So I'd like us to look first of all at a definition of financial management and then compare this to accounting, and then see what is financial management compared to accounting. A lot of people and businesses hear about accounting, they do accounting, then we talk about financial management, and then we find that there is a disconnect. So financial management is the coordinating of money resources in a business in order to be able to accomplish the set objectives or the goals of the business. So the money resources, given that they are scarce, they are not unlimited, need to be coordinated in such a way that the business is able to achieve those set objectives. So financial management involves handling business finances in a way that enables the business to be successful in achieving its set objectives and also to be compliant with regulations that have been set. And this is because businesses do not operate in a vacuum. They actually operate within a regulatory environment. And so it is important that as you work at succeeding in your business goals, then you also meet the obligations of the environment, within the environment that you're working in. So when we compare and contrast what financial management is and what accounting is, we are able to see that first, from just a definition perspective, financial management is broad in that it is general managerial principles that help and guide us in the area of prudent financial decision making. Whereas accounting, on the other hand, is a systematic process of identifying, recording, classifying, summarizing, verifying, measuring, and interpreting the financial communication or the financial information that we have in a business. So we do different things that enable us then be able to do accounting. And as we'll see from this definition and the other items we'll talk about, these two areas of financial management and accounting are not exclusive of each other. They are totally interdependent. Then when you look at the objective of financial management, it is about profit, value, and wealth maximization. What Faustina alluded to, bringing your business from a place of inception to profitability and growth. Whereas accounting focuses, the objective of accounting is reporting of financial information in the business. Then when you look at importance, there is effective utilization of assets and resources of an organization. Financial management will help you coordinate the utilization of those resources. Whereas in accounting, we report the financial information using principles, using standards that have been set for us, and using accounting or financial statements that are prepared and presented in a certain way. Financial management, on the other hand, is a continuous process. So it's a process that actually runs through the life of the business. It doesn't have an endpoint in it. It's a continuous process. Whereas accounting, on the other hand, is periodic. So we can account for a day, we can account for a week, we can account for a month, a quarter, a year. So accounting, we account for periods in time. Again, when you look at the focus, financial management is futuristic in its focus. We are trying to plan to achieve certain set goals. Whereas on the other hand, accounting focuses on historical information. We report about past periods, past performance in accounting. The outputs that come from these two disciplines, we see from financial management, the output is actually analysis or forecasts or projections that come out of there that help us then plan how we move ahead. Whereas in accounting, the outputs are financial statements. We talk about a profit and loss account. We talk about a balance sheet. We talk about a cash flow statement, which are all backward looking. They talk about past performance. And then the basis of which we prepare this on, financial management is on a cash basis. We are talking about cash projections, cash in, cash out. Whereas accounting goes a step further than that, where we talk about an accrual process, where we record transactions as and when they happen, and we record money transactions as they are incurred rather than when money is received. So that's just a quick difference of the two, accounting and financial management. And then just to mention that you cannot go into financial management before you have done accounting. Financial management borrows from accounting. The information that goes into making decisions around financial management comes from the accounting process. So the two are not exclusive of each other, but they're totally dependent on each other. So what are the key elements of financial management for SMEs? And a good thing to note here is that financial management has always been thought to be for those larger organizations that are established, that can hire and have qualified accountants at high levels. But financial management is essentially for any business. In fact, as a startup, you need to start with that financial management process of preparing a plan strategic planning, coming up with a forecast of where you want to go, how you want to look like before you even start the business. So this process of financial management is supposed to be practiced by every business. It's not just for large businesses, and especially for the smaller businesses and the mid-sized businesses. This is critical in being able to plan the limited resources that are available for you to achieve the goals that you want. So the key elements that we're going to be looking today that help us manage our businesses better will be, one, separating your business from yourself. This is where we say separating personal and the business affairs. Then we look also at maintaining proper books of accounts, because these are key elements that we need to do in order to manage finances right. Then understanding tax obligations. Tax is a sure thing for any business and for every individual. And therefore, it is important to understand tax obligations for your business and ensure that then you meet those obligations as and when they fall due. Then we'll also look at budgeting and planning, how that happens, the importance of that, and how you can be able to do that for your business to see it move to the next point. Then analyzing your performance and taking appropriate or corrective action. Now, this is where the rubber meets the road. This is where you have a plan already, and then you have actual that has happened, and you compare the two, and we are saying, so what do we do from here? Faustina alluded at making informed decisions. Now, this is where we take the information the business is giving us and apply it to the decision-making process for informed decisions. We talk about managing cash flow, and then we'll also look at what are some of those key risks that small and medium enterprises face, and how do we identify and then also mitigate against these risks for those that we cannot eliminate. And we'll see that for most of the risks, we can't eliminate them, but we can mitigate them. How is that done? So these will be the key things that we'll focus on today. And so let's dive in and take this walk together. So the first thing we talk about is separating your business from yourself. And the very first point of this separation is actually registering a business. Many of us sometimes when we start this business as a side hustle, as something that we are doing on our own. But down the road, what happens is that it grows. And then it ceases now becoming the side hustle. It becomes the main thing. It is important to identify where your business is at, so that then at the appropriate point, you can actually then register this business. Now, there are different forms of registration that come in. And even when you're running the business on your own as an individual, you can register a business name so that informally you start separating the brand that you're building and what your customers start get to knowing. You start delinking that from yourself from a very early stage, even before you've registered a separate entity. But then beyond that, now you need to determine whether to register a company, whether to register a partnership, or some form of registration that will actually enable you to carry out the trade that you're carrying out. It is important for you to understand what the obligations for each of these different registrations are. What do they bring with them? What are the pros of each? What are the cons of each? And how does that fit into the business that you're running? And this is what the strategy process takes you through, being able to identify what is the most appropriate vehicle for your business. Now, once you identify that, then you go ahead and register and run the business out of that registration. The second thing you need to do is separate your business finances from those of yourself as an individual. Now, most small businesses start, like I said, as a hustle, and usually there's no distinction. Money that comes in is money for the business, money that comes in is individual money, and how it is spent, there's actually no distinction. But it is very important now to then start separating the affairs of the business. So you look at the money coming in, you actually separate those. You can open a business bank account. We heard from David that Old Mutual one of the integrated financial partners they have is Faulu Bank. So they offer that kind of a solution. So you can open a business bank account, you can have an M-Pesa account, you can have different forms and even separate M-Pesa from personal and business. You can have a line for the business. And therefore, you do not mix business and personal income and expenditure. Now, this is the very first point of helping you, first of all, track how your business is running and be able then to make informed decisions around it. Now, this comes in very handy. This separation comes in very handy when we start talking about taxes. Because the moment you intertwine personal and business, now taxes become very, very complicated at the end of the day. Then you need to understand the obligations of the business type that you have registered. Now, obligations come in different forms and different arenas. There is some statutory or legal obligations that come with different registrations, and some of those include doing a return to the registrar of companies for a company, various types of returns that are needed by various authorities depending on the registration of the business. However, each business type also comes in with its own tax obligations. Now you need to identify what are the tax obligations for the business that you're running, the business type, and also the nature of the business that you're running, so that then you can be able to understand how then to run them and to comply with each of those. So once we separate then business, we've started separating our business and our personal transactions, then now we are ready to be able to then maintain proper records. Now, records are very important. First of all, from a tax obligations perspective, the tax laws require that you maintain proper books of account for your business. It is the one way that the Revenue Authority and even for you as a business will be establishing how much tax is due and payable from your business. But this process of actually maintaining proper books and proper records does not have to be complicated. The first point of it is gathering all what we call source documents. Source documents will include things like invoices, receipts, bank statements, contracts that you have with customers and with suppliers. So these are the source documents that we have, and it is important that for every transaction that your business does, that there is a document for it. So when you deal with suppliers, kindly ask them to issue you with invoices for whatever goods or services they sell to you. When you make sales to your customers, it is important then also to issue a document, an invoice for the goods or the services that you're selling to your customers. Then bank transactions. The beauty is that banks will always issue us with a statement of transactions at the close of a period, usually the close of a month. So you will be able to receive this. For M-Pesa transactions, we are able to receive the same. So it is very important for you to then ensure that for all the transactions that are happening, you are getting what we call source documents. Now, for some of those informal kind of transactions that you incur in the business, and then you do not get a document for it. For instance, one of your staff members needs to move from point A to point B, and they use a matatu or they use a boda boda to actually do this, and all they do is make a payment. It is important that on the back end, at the back office, when they come in or when that cost is incurred, then you generate what we call a petty cash voucher to just record that transaction as it happens, so that then it is not forgotten, and then we have an accountable document that we can use for that. Then the other thing you need to do then is record these transactions. So write out these transactions in an organized manner. In accounting, we have a way in which we do this based on debits and credits. However, for you as a business owner, all you need to do is keep a very good log of what are your incomes on a daily basis, what are your expenses that are incurred on a daily basis. Describe them, put in the amounts and the dates on which they were incurred. That forms organized information which an accountant can then come in and create books of account for you with. And for even you as a business owner, this will really help you. Such a record will help you track incomes and expenditures. You will be able to compare the two and actually be able to see whether you're spending, what proportion of your income is being spent in expenses, and be able to track that on an ongoing basis. Then as you grow and as need comes by, automate your records. Identify a tool that is appropriate to do this for you. And today we have a lot of tools available on the internet. And some of these tools are free. They just help you do it in a more efficient manner, logging in these expenses, logging in your sales, and you're able to do that, creating invoices that then you can issue to your customers. You're able to do that in an efficient manner. So you identify a tool and you can identify then these records. And then once you have done that, at the close of periods, at the close of a week, usually we say the best is at the close of a month, generate financial statements. Now, basic financial statements would include a profit and loss account, which is a listing of your incomes and your expenses, and basically establishing, was there a profit or a surplus in the period or a loss. That's what a profit and a loss account would do. A balance sheet, which is actually a listing of the assets of the business and the liabilities of the business. So we want to see what assets you hold, and this could be equipment, tools, stock, cash, money in the bank, against liabilities. This is what you owe to suppliers and owe to other people, owe to the revenue authority for tax and that. So you want to see the balance of these two to try and manage through the financial management process that your assets always exceed your liabilities for a business. Then once we have maintained good financial records, we then want to go in and understand what are our tax obligations. We talked about this, and it is very important. So whether you're a sole proprietor, whether you're running a company limited by liability, whether you're running out of a partnership, each of these forms has an obligation, a tax obligation. So you need to identify what are the tax obligations for this business or this form of entity that I am running. So an expert will be able to help you identify that for a company, these are kind of obligations. For example, a company, a limited liability company, one of the requirements is for it to file an income tax return at the close of its accounting year or its financial year. So it is important to understand what are the requirements of this income tax return. Now, depending on the business, some businesses will be registered for taxes like VAT, and there's a requirement then to account for VAT on a monthly basis. Some businesses, most businesses have employees, and therefore they pay them salaries. And from these salaries, they're deducting tax, pay as you earn tax. And then there's a requirement to file this tax and make the payment by certain days. And we are going to see that as we move. So you need to establish the obligations for your business. One, which are those standard obligations like income tax. And then two, which are those additional obligations which your business is registered for, depending on whether it has employees, pay as you earn, VAT on if you've reached the 5 million threshold and you're registered for it, and withholding tax, depending on those businesses that consume and pay for professional services. So you need to be able to establish what are those tax obligations. Then establish the taxes that your business will need to pay. And once you do that, or you're an expert or an accountant has guided you on that, then you need to plan for these taxes. You need to plan to have the cash to pay for these taxes in good time. And these are good accounting practices and financial management practices help you identify this early enough and plan for them. And where then you find that there's a cash deficit, then you have ample time to speak to your financial partner like Old Mutual to see how then you can bridge that gap and be able to meet these obligations. Then sometimes you may find yourself in a place where you are in tax arrears and you have some tax challenges, some things never happened as they should have happened. I say here, let's not bury our heads in the sand. If you find yourself in this position, speak to an expert who will help you identify how to regularize this and then put it in your financial management plan of how this will be regularized. And then we say, as part of the financial management process, we tax plan. We plan for our taxes. And this is what helps us figure out how do we run our businesses in an efficient way so that we minimize the tax that we pay. We cannot eliminate tax, but we can minimize the tax we pay by understanding what the provisions of the tax laws are, understanding what the requirements of our businesses are, and then seeing how we can match the two to have the best for our businesses and therefore end up paying the minimum tax that we can pay legally in that. So once we tax plan, we want to understand what are some of these, when we talk about taxes, what are some of these taxes and what are some of those dates then that you need then to understand and put into your financial plan for them. So the first tax I alluded to was income tax. We also call that corporation tax, which is due, a return for it is due at the close of the financial year. However, it is important to understand that the tax is actually payable during the year in quarters at the close of every quarter. So by the 20th day of the 4th month of your financial year, the 6th month, the 9th month, and the 12th month. So it is important here to understand that without financial records, you cannot comply with this requirement, which is a requirement in the Income Tax Act. So it is important then that we keep good records and then we plan to be able to do this. For those businesses that are under the regime of turnover tax, this is due by the 20th day of the following month. Turnover tax is just a simplified form of income tax. And some of the smaller businesses prefer to do this, where you actually just register for turnover tax and pay 1.5% of the sales of the business in a month. And therefore, it eliminates the need to keep elaborate books of account and to calculate profit and therefore tax from the profit. However, before you move into this convenient and easy way of doing it, I would say have your accountant advise you and do the benefit of analysis on your business to establish whether with turnover tax or income tax, which of the two is going to yield lower tax. And that's what the tax planning process is all about. There's withholding tax, which is a tax that's deducted on payment for professional consultancy and management services. Now, this is due by the 5th day after you have paid whoever your service provider was. And then there's pay as you earn, which is due by the 9th day of the following month. And this is the tax that you as entrepreneurs on this webinar should be planning for now, because it is due in the next few days. And then we have advance tax. Advance tax is a tax that is paid by those businesses that operate commercial vehicles. So this is paid per vehicle that they own when they are actually getting those vehicles licensed for the year. And this is due by the 20th day of January. And then we have rental income tax for many of you who actually have own properties and you collect rent on them, and these are residential properties. Then there's a requirement for residential monthly rental income tax, which is due by the 20th day of the following month. And then we have value-added tax, which is a tax on sales that we make, and it's due by the 20th day of the following month. Then we have import duty, which is payable as goods imported into the country are cleared. So that one is done at the port, at the point of importation of goods, at the point where you're clearing those goods. And then we have capital gains tax. This is an understated tax, but is keen, one that you must be aware and keen of. And capital gains tax is paid at the earlier of either receipt of the full purchase price by the seller or the registration of the transfer of a property in favor of the purchaser. So at the first onset of either of those two events, it is important then that you pay the capital gains tax that comes on it. Again, I must reiterate, it is important that you understand because most of the businesses that we run have an obligation for one or more of these taxes. Some of these taxes fall due based on an event. For instance, capital gains tax is usually not a recurring tax for any business and will fall in when the business or the individual sells a property. And then they meet the requirements of that. So it is important that then we track this, that we are then able to know what tax is coming due, and then have a further understanding to ensure that as we are making payments of these taxes, as we are filing for them and making payments for them, that we are doing the appropriate amounts, we are doing the right amounts. We are not overpaying our taxes because of wrong calculations. And on the other hand, we are not underpaying, because that then brings in the onset of possibility of penalties to be paid and interest on unpaid taxes that would be paid. Faustina, I'll hand over to you now.
Wow. Thank you. Thank you so much for that, Thomas. I think one of the things that I'm just thinking to myself as you're making the presentation is that we need to remind SMEs, now that KRA is sort of having access to our financial statements, our M-Pesa statements, our bank statements, the taxman is not going to spare us. And they say ignorance is never an excuse. We cannot say I did not know or I never raised a receipt. And then the other thing that Thomas has reminded us is just because you have a tax compliance certificate, it doesn't mean you're fully compliant. So understanding your tax obligations is very, very key. And if you don't know, you have access to so many experts, Thomas included, Old Mutual included, Wild included, to just help you understand the tax obligation. So you have given us so many reasons why we need to really think about, some of these business decisions we're making. Are we paying the right amount of taxes or not? So thank you so much, Thomas, for that profound presentation. So now we've reached the halfway mark for the day's activities. And as I mentioned earlier, we're going to have a trivia. We want people to win prizes for being good students. And therefore, as you can see on your screen, we have a QR code. So I want you to scan it. It will take you to Mentimeter. You'll be required to just put your first name and your telephone number, because we need to find a way of reaching the winners. So there's a question there, and the question that you will see once you've scanned the Mentimeter QR code, I'm hoping you have already scanned it, or I can just give you like a minute to do so. Please scan the QR code on your screen, or you can put in the address shared there on the screen and enter the code 1244848, and then you answer the question. It's a very simple question. Which of the following is not a product or service provided by Old Mutual Kenya? Which of the following is not a product or service provided by Old Mutual Kenya? And the options, I'm telling you, options, kept there. Insurance solutions, A. B. A is insurance solutions. B, investment and savings plans. C, real estate development. And D, retirement pension plan. It's a very easy question. I think David gave us that answer in the first 10 seconds of his speech. And let me repeat the question. Which of the following is not a product or service provided by Old Mutual Kenya? A, is it insurance solutions? B, investment and savings plans? C, real estate development? D, retirement and pension plans? So please, very quickly, fill in your response. The first person gets something, and a random number in my head. The ninth person is going to get a gift. We're going to give you a gift hamper. Yeah, a gift hamper sponsored by Old Mutual and Wild, right? And I'm going to announce the winner towards the end of the session. All right. So one more minute, because I can see we are not yet there. One more minute. You can see the answers coming in on the chat. Okay. We have our team on the back end that is doing the tallying. IEBC, this is, proper IEBC. They're the ones who are doing the tallying to pick the winner, the rightful winner. Okay. All right. You can see we have so many winners. Is there a possibility for us to get 2 more gift hampers? The guys on the back end, any possibility? Because you can see we have so many A students here. Yeah, too many A students. Okay. Quincy Mutira says, I know I am the winner. We all know, but is it really you? Is it, Quincy? We will see. All right, so now we can go back to the session so that we give Thomas now to break it down for us, in detail about proper financial decision making. Him having taken us through the difference between financial management and accounting, understanding, the different financial statements critical in your decision making, and also helping us manage a big thorn called tax that we have to pay whether we want to or not. Understanding the different brackets or obligations that are there. So now he's going to get into now the final session of the day, which is basically breaking it down for us so that we know what way forward as entrepreneurs. When he's done, I think we can go back to a little bit of Q&A. So I'll pick a couple of questions from the chat and also the Q&A box, which will be addressed by either Thomas or Old Mutual or Wild, depending on the nature of the question. And then now we can announce the winner amongst other announcements that are going to be made during the session. So over to you, Thomas, so that you can continue with the presentation.
Thank you, Faustina. I hope I am a winner. I hope I am a winner also. So let's just moving ahead. Let's talk about now budgeting and planning. So we have looked at one, you have kept your records, and you actually have good records that you're keeping from an accounting perspective. You're recording incomes and expenses and things that are happening in the business. And then you have identified what your tax obligations are, and you're working well in this area of being able to identify them and file them correctly. So one of the key things in financial management is budgeting and planning. And so it is important for every business owner to create a money plan before the start of every year. However, I put this forward and say today is always the best time to start if you have not started this. So you can actually do a money plan on a monthly basis for the much smaller businesses. So every month, as you're coming to start the month, do a money plan. I've come across businesses that even take it a step further and do it on a week. They actually do their planning for a week, and they track their performance week on week on week. So it is very important that then now we create a money plan. Now, the steps we need to use in creating this plan is
Excuse
when we,
me, Thomas. So,
yes.
Thomas, sorry for interrupting. I think we are losing you. Maybe you can move closer to the mic.
Oh, sorry for that. Is that any better?
Okay. Yes, yes, much better.
Okay. Yeah. So in creating this plan for our spending or for our money, for our business, the first thing we need to do is identify what our sales are. So based on the sales that we have been making historically, we can then be able to establish these are the sales that we are able to make. We are able to actually go into the market and sell this number of units or sell this level of service and come up with that. So we actually forecast what our sales units and values will look like. And then we establish what is our production cost? What is our direct cost? What is the cost of us being able to make this sale? So for instance, if your business is producing clothes, so you have a fashion and tailoring business that is producing clothes, garments at the end of the day, you need to establish if you say in a year you will be able to sell 120 units, which is on average 10 units every month, then you need to be able to identify if I'm selling this each garment for 3,000 shillings, how much does it cost me to produce it? So you need to determine what is your labor cost, what is your raw material cost, and then what are those other overhead costs. Sometimes, many times we leave this out. So you would be looking at what's the cost of electricity in running the business, what's the cost of maybe rent in the space where you operate from, what are the costs of doing other things like running my phone, airtime costs, internet costs. So you'll be looking at all those. When I sell, when I actually may do promotions and advertising on different maybe social media platforms, what does this cost me? And therefore, you want to identify what this production cost is. And then we look at what our other expenses are. And now this will be the expenses that may not be directly attributable to an item that we sell, but we actually do incur them. So things like marketing costs, sales costs, administration costs, financing costs, because sometimes we borrow money to be able to run the business, and we can borrow this money in different fora. You can borrow it from the bank. You can borrow this money from a friend. You can borrow this money using Fuliza. There are different ways in which people actually finance transactions in the business, and we need to be able to identify what are the related or associated costs with that. And all these items we put together in what we are calling our money plan. The money that we expect to come in from what we sell, and then the money then that will go out from what we are purchasing, which will be direct from like labor, raw materials, overheads, including things like salaries we pay, rent that we pay for, internet connection that we pay for, our airtime that we put on our phones and we use to run our business. All those costs, we identify them. Now, once we have them in that plan, then we are able to tell from the plan what to expect as an output of the business. So when we run month one with the expected sales and the expected expenses, do we expect a profit? And if we do, at what level of how much? So then we start working towards that plan. We start executing that plan. We start going out into the market and selling those units. We produce those dresses. We go out and we make sure that we sell them. We do whatever we need to do in the ability of our business then to meet that target of the plan that we have. Then once we have done that, we then need to do one of the most important and critical things in financial management, which is tracking. And we call this tracking actual versus budgeted, or actual versus plan. And this is where you look at the plan that we made, and then now the month has happened, and we have sold our units, we have incurred our expenses, and we have recorded all these as we have spoken to in the past. And then we compare these two. So we had a plan where we said we want to sell 10 dresses this month. and we want to sell them at 3,000 shillings each. So we expect an income of 30,000 shillings. Then we also have incurred costs. We had projected that the cost of producing these dresses was going to be 1,500 shillings each. And then we have other expenses that we need to run to run the business for the month. For example, for 5,000 shillings for the month. So that is the plan we had. Then now we come and see what happened actually. And when we actually look at our actual records, we then establish that we managed to sell 12 dresses rather than the 10 that we had planned. However, the costs of producing each dress were 1,800 shillings each and not the 1,500 that we had planned. And then the other costs of running the business ended up being 6,000 shillings, more than the 5,000 shillings we had planned. So when we compare these sales and expenses and the profit at the end of the day, we will have a variance between the budget and the actual. Now we need to establish and ask ourselves as business owners, what caused the variances? So we have higher sales because we sold more dresses than we had anticipated in our plan. So what was the cause for this? Is it that we went out and marketed better than we usually do? Is it that we went for a target market that we had not anticipated? Or how did we go about it? Is it because that we chose to sell some of these dresses on credit rather than for cash? And therefore we attracted a new buyer who is able to pay us after a period of time. So we identify what causes the variances. And then those help us now make decisions into how we move into the next month. We look at our expenses and we realize that we spent 1,800 shillings on each dress as the input costs against a budgeted of 1,500. So what caused that difference of 300? Was it that our raw material costs, our material costs went higher? Was it that we paid more for labor? What caused this? And then we figure out how to then come up with decisions in the business that will help us either move back the costs, or if not, then what other decisions do we need to make in order to cover those costs, assuming those costs cannot be reduced? So can we increase our selling price? We look at the expected profit and then what was achieved at the end of the period. We compare this and then we do that. So it is very rarely in a business that a budget will exactly match the actual results. But it is important that you identify these variances because they actually create for you a starting point for managing the business right using information. Now, this is the information that you use to start managing the business. So you do the plan, and when you have the actual, you compare. And the variances then help you now identify or make decisions. And this is what we call informed decisions on a granular level, touching on sales, touching on expenses that you incur both from direct costs and other costs. After the budget, we've done that. The next thing we do is we want to analyze the performance so that we are then able to take any corrective action that is required on an ongoing and on a timely basis. So it is important here now as a business owner that you understand some key business ratios, which you will be able to establish from the financial records that you're already keeping. And then how do you interpret them? And how do they help you then make better decisions going forward? So one of the key information points that you need to understand is a gross profit margin. And this is basically your sales value minus the direct costs. So in our example here, of our fashion business, where we are producing garments or dresses, it is the sales value, the 3,000 shillings we are selling the dress at, minus the cost of producing it, which we saw actual was 1,800. So the difference of 1,200 now becomes our gross profit. And we can calculate it as a percentage, and then we call it a margin. So it is important to know what is the right margin for your business, or a target margin for your business based on the plan that you have made. And then when you have the actual, you compare those two. And if it is lower, then you have to make decisions on how to raise it up. Is it price, selling price that you need to raise? Or is it finding a way of managing the costs to reduce them so that then you can have the anticipated gross profit margin? Net profit margin is what is left after all the costs have been deducted from the income that we have made. So now we have established what is gross profit. Then now we look at what is our rent, what is our electricity cost, what is our salary costs, and all those other things. And then what is left at the end of the day is either a profit or a loss. Now that's the net profit. And we need to plan for this early because tax, again, is based on profit. So when you make profit, then it will be subjected to tax. So we then need to be able to plan for that, because if your business then is making a profit as we would like it to make, then you can be able then to start planning for how much tax will be due and when will it be due. So you start making arrangements to make payment for that. Then we have other ratios. One we call a current ratio, which is a ratio that looks at your assets against your liabilities, your current assets, your liabilities. So we are looking at what does the business own in assets that it's able to convert into cash. This is the money in the bank, the money on the M-Pesa account, the money that is sitting as cash in the till, and the stocks, the inventory, the dresses that have been made, the material that we are still holding and we are waiting to convert or to tailor into dresses. And those are things, those are the assets of this business. And then what are the liabilities? Probably we have not paid our supplier for materials yet. So we need to pay them. So we owe them some money. And then we have borrowed some little money from a friend to be able to finance the business for the month. So we look at those assets, we look at those liabilities, and we compare them to each other. And like I said, we always want our current assets to exceed our liabilities. We always want the business to own more than it owes others. And that is one of the signs of a healthy business. Then we look at other ratios like debt. This is financing. How much have you borrowed to finance this business? Some businesses borrow so much that any money they make in profit is going into paying the interest for what they have borrowed. So in other words, they are working for those they have borrowed from. They're not working for themselves. So it is important to establish how much a business is borrowing and to then make the decisions that will make your business profitable enough so that it has some money that can always remain in the business to create its own working capital. Therefore, the business is generating profit that it can then use to grow and enlarge the business without necessarily having to go and borrow money all the time. There's need to borrow here and there, and there's good debt for business, but then the business should also be able to generate its own money to invest in itself. Then other ratios will be like inventory turnover ratio. And this is a ratio that basically helps you as a business owner identify how long are you holding stock for. When we produce these dresses in this business, how long is it taking us to sell them? When we buy the material and then make the dresses and sell them, what kind of period is involved there? Are we producing dresses in January that will only be selling in the month of June? Or are we producing dresses in January that we will sell within the month of January and maybe a few leftovers in the month of February? So we need to make our businesses efficient. So when you look at a ratio like this of inventory, it is important then, it will help you know how much stock you need to hold, how much material you need to purchase and keep at any time to be able to meet your needs, the needs for your sales. This will help you, one, be efficient in the area of, one, you don't hold too much stock, so you're not paying for interest on borrowed money. And then two, you're able to convert the inventory into cash very fast through sales. So it is important from the plan to work out and ask your accountant to help you work out these expected ratios. And once you have expected ratios from the plan, when the actual records are done at the close of the period, close of the month, then you can compare and see how do we compare. Are we doing as expected? Are we doing better? Or are we worse than we are doing? So it is very important to analyze performance of the business and take corrective action. And now this is where the process of financial management goes beyond your workers in the business, because they can assist you with this, but as a business owner, this is what you need to do. This is what you need to understand, so that then you make those decisions and you can guide the business in the way that they need to go. So we have then analyzed our performance. We are now taking corrective action. And the next thing now we need to do is we have all the inputs now to manage our cash flow. Now, cash flow management, again, comes from the schedule that we have of the plan, the budget and the actual, because it's able to show us the cash that is coming in and the cash that is going out. So for a period like a month, we are able to then establish the cash that will come in and the cash that will go out. This is based on incomes that we will make, sales we will generate, and expenses that we pay for. And if we are able then to make a plan of this, we can be able to tell the months in which we will be having more cash coming in than cash going out, which are those months then we say we have a surplus of cash. And we will definitely have some months. Most businesses have some months or some periods where the cash going out is more than the cash coming in. And therefore, there's a deficit. Now, the question is, what happens when there's a deficit? Now, if you identify that there will be a deficit early enough, it means that you can take some corrective measures in advance. Either you can you can find a way of making more sales, cash sales, and therefore collecting more, so that then you don't end up in that kind of a position, a deficit position. Or which expenses are you able then to delay and ensure that then you pay when the cash is available? And for some of them, it gives you times when you identify them early, you can speak to your suppliers early enough and then be able to delay this, but you just make a plan around that. Or where then need be is that then you can borrow money to actually meet those gaps, to bridge those gaps in time. So you prepare that schedule of cash in and cash out, and you can tell where you have surpluses and deficits. And in the months where you have surpluses, some of that cash then can be saved to be able to be utilized in the month where you anticipate a deficit. Then you compare the total cash in and the total cash out. And then once you've identified these deficits and surpluses, then the planning around what do you do with them. And where you have surpluses, depending on the amounts, then you can actually even invest some of these monies in some short-term tools or short-term investments that can then generate some additional income for the business, and then get the money when it is due, and then use it in the business once again. So plan out this through. We said some of the strategies you can go through is delaying some spending or collecting in advance, meaning that you cut out the credit period that you're actually giving to your customers. Then you're able to manage cash flow. Now, cash is said to be king in businesses, because businesses, the moment cash runs dry, it means many things go wrong in a business. You lose sales, you could end up losing customers, you could end up losing your good employees if you can't pay them on time, and you can't meet your obligations. It means then that you can't have the right relationship with the revenue authority, because they will be chasing for this. It means that for those who may have financed your business, you cannot meet those obligations on time, and therefore you might even get to the point where either some of the loans are recalled or you lose some of the assets used to secure this. So management of cash flow is critical. It does not matter the size of the business, it needs to be done. And if the business is smaller, where the earlier you start it, then you build this as something that becomes a formality in the business. And as the business grows, then you have an easier and a better time doing that. So we manage our cash flow. And then after we've managed cash flow, business is running. One of the other big key things that we want to do in a business is identify and mitigate our risks. And this is one of the areas that as SMEs, we actually do not spend enough time planning around. But as in financial management, it is one of the key things that we bring out and we need to talk about. Identifying and mitigating risks, because it is not possible to eliminate all risk in a business. However, there are ways in which some of these risks, once identified, quantified, can be mitigated to some levels and some degrees. So in SMEs, we usually talk about a key person risk. You as the owner of the business, especially if you're involved in running this business, things that would cause death or disability are a key risk to you, because if that happens to you, then there is a major impact in the business. So you need to identify that as a risk in the business and identify a way in which you can mitigate it. We say death and taxes are the only things that are assured. However, because we may not be able to push them away, we then come up with a way of mitigating them through insurance, that we can do that. Then the equipment and the property that we use in the business. In our example here of our garments business, we have sewing machines that we have invested in. We have racks where we hang our clothes and display our clothes, and we have bags that have been made specially for us for being able to transport this to our customers and all this. Now, this could actually be damaged for various reasons. So we need to identify that as a risk and see how do we mitigate then this risk in the eventuality that it happens. In our businesses, we have third-party liabilities, and these could come from accidents that happen, incidences, negligence that could happen within our businesses that we could do as we perform our services. And this, again, could cause us financial harm. This could have financial implications, because then we may need to pay or compensate people. So we then need to be able to mitigate these risks through appropriate covers. Illness or sickness of business owners, and not just business owners, but even employees who work with us and for us. How then are we able to do that? How are we able to help them manage health when it starts deteriorating or when sickness comes in? How do we do that to ensure continuity of our businesses, that they are not interrupted and they're able to continue? So unforeseen business interruption, this could be interruptions like we saw some time back from a political angle, when we have demonstrations happening and then businesses are interrupted. We can't open our businesses. We can't go to our workplaces. We cannot fulfill our sales orders. We cannot produce. And we have negative impacts on our businesses. Are there ways in which we can mitigate risks and losses of that form? Injuries that happen at the workplace, these are the things that we need to look at and figure out how then, because this could actually then happen at the workplace. How then as a business do we cover that risk for ourselves, so that in the event it happens, then it does not disrupt our business. It does not force us to shut our business or scale down our business. Theft of cash by employees, we have seen this many times. So how do you do that? Because our businesses deal with money. So how, and as our businesses grow and we have employees coming in, then they handle this money. It may not necessarily be cash. It could be money that is in the bank, but the employees are then involved in running those transactions on your behalf in the bank. It could be on M-Pesa. How do we handle this in the event that there is theft by, say, employees? And then for those who are offering professional services like I do, professional liability from negligence. These are mistakes in professional services. You gave advice that then led to a client incurring a loss because of the advice that you gave and they implemented. How then are we covered against things like this that we do? So it's very important that one, as part of that financial management process, the planning process, we identify the risks that are associated with the business and the trade that we carry out. And then once we identify them, we speak to an expert like Old Mutual and come and identify, quantify what these risks are for our business, because their valuation for different businesses is different. And then how do we mitigate them? What are those things that we can do? What are those things that we can put into place to ensure then that if this risk occurs, my business remains whole? I remain whole in this. Faustina, I think I'd like to hand over to you at this point to guide us through then our next session.
Wow, thank you so much for that, Thomas. Again, the triggers that you're bringing to the table when you talk about the liabilities of an individual. You know, sometimes we ask entrepreneurs, is the business founded on a person, or is the business founded on being a business? You know, an institution can run itself, or it is the person who is the institution. You have put it in such scary terms when you refer to the fact that, well, even you as an owner, you can drop dead today, then what happens? The business disappears. Yeah, quite a profound thing to think about, but thank you so much for that. The risk, for me, I think the risk part was just amazing. I love that. Can even see some of the comments coming in from people. I'm sure there's just so much that they've learned in terms of decision making. A lot of requests for the slides. Definitely, we will share with you guys the slides, as well as even give you contacts of Thomas so that you can reach out to him. Yeah, so we will get into the Q&A session before we announce the results of the winner. And there are a couple of questions that have come through the Q&A. Some have come through the chat box. So I'll just pick out a few. Those that I failed to address now will be addressed later directly by either Thomas or the Old Mutual team, depending on the nature of the question. So just a few that I've picked up from the Q&A. A lot of comments have come in, Thomas, and this is directed to you, about personal finances. They've come in very different formats. So this is how I've chosen to summarize them. So how do I pay myself a salary? How do I decide what I am to pay myself, especially when my business is not profitable? So I'm just going to read out a couple of questions, and then I think then, Thomas, you can answer all of them. That was, yeah, I think that will be easier. That was now question one. Another question from Susan Macau is, could you differentiate between corporate tax and turnover tax from a business that has not yet reached break even? Okay, so I'll repeat the question. Differentiate between corporate tax and turnover tax from a business that has not reached break-even point. Then the third question from Lucy Mudusi is, should I file, or how should I file my taxes when I have multiple households that are not registered? So I'm getting money in my account, but I'm getting money from different sources. So should I really file my returns, or how do I file my returns? Then another question, the fourth question from Frederick Mayo. How do you compute the tax obligations for board members who work for other organizations? Or should I really compute those taxes, right? So from Frederick Mayo, I'll repeat the question. Tax obligations for board members who work for other organizations. And then two more, I'll pick two more. This was from Karl Marx Abunga. Karl Marx, that's a very, very strong name. Karl Marx is asking, how will the new tax models on taxing pay bills? I hope SMEs remember they are thinking of your pay bills. Yeah, so how will the new tax models on taxing pay bills affect our small scale businesses? And then lastly, from Angela Ngeto is, which tools do you recommend to capture these expenses? moving forward. So I think I'll pick those 6 questions for now. If time allows, then we can go and pick out more questions. Thomas, you can try and answer all these questions.
Yes, thank you, Faustina. I will attempt my best to do that. And if I skip any, please kindly remind me. So I'll start about that question of how do I pay myself as a business owner? One of the things we say, it is very important as a business owner for the business to pay you. And especially for small businesses, business owners do not get paid. And what happens is when they don't get paid is that they put their money, their hands in the coffers of the business. So this is where they now don't separate business and self. So they have a personal need and it is paid from the business resources. And when the business has a need and there's no money, that need is paid for using personal resources. So it is very important from the earliest onset for every business owner to establish an amount that the business can pay them. Now, this amount may not be adequate to meet your living expenses. However, it is a starting point to form the habit of the business having an obligation to pay you a regular income like you pay your employees or your workers. So set it and just plan it as you do your plans and then have the business pay you. It could start as low as maybe, for example, 5,000 shillings a month. But then as the business grows, then ensure that this is one of the things that then grows with the business. It is important for you to establish what the business is able to pay, because for many business owners, the lifestyle they have or the lifestyle they want, their businesses are not able to meet. However, you need to build the business to the point where it is able to generate enough to pay you what you need. But before it gets there, then you do not kill the business by taking away its working capital in that. But form a habit of just having a salary and let the business pay you regardless of how low it is. And you actually, when your salary is below 24,000 shillings in a month, then there will be no pay as you earn on it, because the relief, the personal relief that is given on a monthly basis will be equivalent to the tax payable. So it's only the other deductions that would be payable on that. So the second question was about the difference between corporation tax and turnover tax. And this is in light of a business that is not yet in breaking even. Now, business not breaking even means this business is not making a profit. It is making a loss. Now, corporation tax is calculated on profit that a business makes, while turnover tax is calculated on the sales that a business makes. And if you remember when I talked about this, I mentioned it's important to have your tax expert or your accountant do for you what the benefit analysis is for your business. So in this example, if, say, for instance, this business is making a loss of 100,000 shillings for a year, in the year, from a corporation tax standpoint, it will not be required to pay any tax. It will file a tax return that will show there's a loss. But on the loss, there will be no tax payable, but there will be a calculation of a loss carried forward to be used in future periods. However, if the same company is under the turnover tax regime, the taxman will not be looking at the loss they have made. They will be looking at the sales they have made. So for instance, if this business had made sales in the year for 1 million shillings, it had incurred expenses of 1.1 million and therefore a loss of 100,000. Under corporation tax, there will be no tax payable because of the loss, but under turnover tax, there will be 1.5% of the 1 million shillings that will be payable as tax. So there'll be a tax payable of 15,000 shillings. So simpler it is to calculate, but not necessarily beneficial. The rate is lower, 1.5% compared to 30%, but of different bases. One is on turnover, one is on profit. So again, identify and establish what is the right tax for your company to be under which regime. Question number 3 was where you have different sources of income. You have many side hustles, and they're all bringing you revenue. They're all bringing you money. So how do we tax this? Now, the Income Tax Act, it actually provides that Kenyan residents or citizens are taxed on their what we call worldwide income, on all their income sources. So if you have 3 side hustles and each of you is generating an income and then you're employed and you're actually earning a salary, then what you need to do is in your tax return, you need to declare. You will have the income from employment, then you will have the incomes from these side hustles. However, for those incomes from the side hustles or the businesses, it is important that then you actually have records so that you're able to identify profit, because tax is payable on profit, not on income. So you need for each of those side hustles to know the incomes and the expenses and therefore the profits that you're making on each, so that you declare those in your income tax return and pay any taxes if there's any tax payable on them. Fourth question was about how do we tax board members who sit on boards and help us make decisions for our companies, but they are employed elsewhere. Now, there's provision for that in the Income Tax Act. The Income Tax Act, as far as employees are concerned, has what are called primary employees, which is where you go to work every day and you get paid a salary from. And then there's what we call secondary employment, which is those other jobs that we may do in addition. So for board members, they are usually taxed as secondary employees. So for board members who are employed elsewhere, you calculate from the board allowance that you're paying them, you calculate pay on it. However, the key difference between a primary employee and a secondary employee is that for the secondary employee, the board member, we do not take it through the graduated scale, where we start with the first band and then the second band. We actually tax their allowance at the highest scale. And with the developments that we saw last week of the Supreme Court ruling on the Finance Bill of 2023, so you tax them at 35% on that board allowance, which is the highest payee scale rate. Then question number 5 was about pay bills. Now that KRA will have access to our pay bills and they will tax us, well, how does this happen? Now, a pay bill will be just used the same way a bank statement would be used by KRA. It's just a way of helping them identify and establish the incomes that your business is making. And I think they will use it as a tool of being able to just confirm that whatever you're declaring as income in your income tax return or in your VAT returns is actually valid, is actually genuine. Because we have businesses that actually do not have all their monies coming through the bank account. Some are paid in cash and maybe then they're not declared. Some are paid by M-Pesa, then they're not declared. And they make sure they only declare what is in the bank account. Because when KRA comes to audit, then they look at the bank account. Now KRA will be looking at varied income accounts. So that's where the pay bill is coming in and all that. So I think they will use it as a tool to just identify and help them confirm that what you're declaring and filing a tax for is actually correct. And then we had a 6th question about which are those business tools that we can use to be able to track income, expenses, and that. Now, we have many of these tools, a lot of them being free, but let me speak about those that will help you do some basic accounting, which is be able to invoice your customers and track your incomes, and then also record the expenses that you're having. And then they can also be able to generate for you basic financial statements, a profit and a loss account, where we compare incomes and expenses, compare our assets and liabilities in a balance sheet. So some of those tools would include some accounting platforms like QuickBooks, which you can go in online and log into and then see a version of what would work for. We have systems like Xero that would be able to do the same for you. Excellent tools for small businesses. Zoho have a tool called Zoho Books that is able to do that. However, we also have some more simpler tools that can be used, like Expensify, Trackit, that some of them are free tools that can help you be able to just log in what is income and log in what is expense, and then be able to just have a tally of those we do. So those are some of the kind of tools that you'd be able to do. Identify a tool that would work well for your business, so that once it will help you do multiple things for your business. It will help you invoice your customers. It will help you record your expenses in a good way. It will help you track who owes you money, who are your debtors. It will help you track who are your creditors, who you owe money. It will help you track what the assets in your business are and the liabilities in your business. Try and establish a tool like that, and an expert will help you. Some of them are free, some of them are subscription and paid based. So see what works for your business and do that. Faustina, we're done with the 6 questions.
You have answered them excellently, expertly. My goodness, even me, I didn't know board members are taxed at the highest scale. So serial board members, I don't know who you're working for, yourself or Gava, but therein lies the response, that is how they are taxed. But thank you so much for that, for the responses. I think for me, they were quite clear. There are quite a number of other questions that have come in. So Thomas is going to respond to them directly. And then I want to repeat that we will share the recording and we will share the slides for your own knowledge. We will share Thomas's contact so that you can reach out to him and he can help you with the financial management of your business. And we'll also share our own handles for you to reach out to us. We are always here we live for SMEs. Remember, Chris called us, we are the dreamers, we are the doers. We are the kingmakers of our own success stories. Okay, so earlier on, a few minutes ago, we asked a question and you gave us your responses and we said we're going to reward a winner. So drum rolls a little bit. So who won? IEBC. Please tell us who won. The question was very easy. It was so easy. Which of the following is not a product or service provided by Old Mutual Kenya? And the answer was real estate development. So who won? We have a gentleman called Hillary. Hillary, your number ends with 288. You were the first person to give us the correct answer. And then I said we'll randomly pick number 9, the 9th person to give us an answer. And this person is Cyrus Kihoro. Your number ends with 331. Yes, your number ends with 331. So the two of you have won a gift hamper from Old Mutual team. And then I'm just getting a message right now, and it says that Old Mutual is going to give out a free risk assessment based on today's presentation to SMEs. So you can, so the winners are also going to get this free risk assessment. My request is that we add at least 2 more people, because there was a comment from one of the attendees that because they were using their phone, it was quite hard for them to scan the QR code. So the team on the back end will pick 2 random people on the chat who gave the answers on the chat, and they will also get the free risk assessment based on these conversations. So yes, it is the top of the hour, meaning that it is time for us to finish our very insightful session with Thomas. And I'm sure there's a lot that we have picked out of all the conversations. I'm sure there's one thing that you're going to live with. And what I would say is that, say that one thing you feel like you're going to live with, you can just type it in the chat. As a confirmation that there's something you have learned, there's something you have gained as an entrepreneur or a potential entrepreneur. For me, I want to say that one of the things that I have learned, seeing that one of my dreams in life is to become a serial board member is that I will pay more taxes. And I don't know if my dreams are shattered, but I have to figure out how to survive this new notion that Thomas has just shared with us. So in closing, one, I just want to say thank you so much to the organizers of this webinar. This is fully sponsored by Old Mutual. Old Mutual showing us that they care so much about SMEs to the point that they have set up a roundtable in partnership with Wild so that we can curate interventions that will support you as businesses to grow, to thrive, to survive, to become the next Elon Musk, the next Safaricom, the next multinationals of this world. 10 years from now, your business must have a legacy that is standing strong. So thank you so much, Old Mutual team. Thank you so much to the Wild team, the team on the back end that has been organizing this. And most importantly, not the most importantly, but last but not least, Mr. Thomas, for sharing with us your knowledge. You know, being able, for me, I count myself lucky working with Thomas. Every time he's talking, I'm always learning something new. I thought I knew numbers until I sat with Thomas. And the way he explains financial management for entrepreneurs is just stellar. So, Thomas, thank you so much. And may the wisdom, keep flowing into your life, into your mind for as long as you're still on this earth. And may we have many more Thomases as we as we move on. Yes. And then lastly, to you, our participants, thank you for joining in. Thank you for those who've even managed to stay up to now. I know we've gone almost 15 minutes past the intended time, but thank you so much for accepting to, just take a few minutes away from the business so that you can focus on building your business by attending such webinars. So again, I want to say that we will indeed share the recording. We will share the details about the speaker, that is Thomas, and we'll also give you contacts so that you can directly reach out to Old Mutual. Also, please follow us on social media. We survive through feedback, so follow us on social media. Give us your feedback. As you can see, there's a QR code on your screen. Please scan it so that you can share your feedback about this session. Also, take time to tell us what else you'd like to learn. What are the challenges you're facing as a business? The SME Roundtable is not about Old Mutual or Wild. The SME Roundtable is about you, SMEs. Tell us what you need to learn. These are things that this is support that you're going to get for free. So take advantage of this opportunity. And so with that, I want to end it there. I was your host, Faustina Ninga from Wild International. I'm just grateful to each and every one of you. I'm wishing you a lovely rest of your week. And may you be the kings and the kingmakers of your journey. There was no music, to end it. Or maybe the team on the background, you can maybe share the Old Mutual video again. Yeah.
We all want to preserve great moments in life. And this is made easier when trusted hands lead the way, opening doors so we can venture out to explore possibilities, refusing to believe the undoable, but always embracing the unthinkable. Inspired thinkers always glued to the possibilities of great futures, embracing challenges with admired hope. A group of good people ready to give you a push as they create, build, and support platforms that steady our feet. Because we believe in new creations that are embraced by all, and changes that make life much easier to handle. This wonderful change is meant to connect our futures. Because we understand in life the things that you desire the most are within reach when we unlock possibilities for you to do great things every day. Call us today on 0711 065 100.
Have you ever thought about the word mutual? Mutual respect, mutual admiration, mutual interests, mutual benefits. It's a little word with big meaning because it describes a state of commonality, of shared experiences or beliefs, and of close relationships. For us at Old Mutual, the word mutual is much more than just a part of our name. It's a promise we make to those we serve. Through our core business activities of gathering capital, investing it on behalf of our customers, and transferring risk, we are working to create a more socially inclusive, resource-efficient, and low-carbon future for all our stakeholders. And it's this that makes us the first choice financial partner for millions of Africans. We understand what is important to people and businesses on the continent and what challenges they face. And they trust us to help them overcome those challenges, protect what is important, and transform their dreams into reality, while constantly evolving how we deliver on our purpose and keep our promises. The reason why we do it is the same today as it was almost 2 centuries ago: to become our customers' first choice to sustain, grow, and protect their prosperity, by offering a range of integrated financial services that truly meet the needs of our customers throughout their lifetime, enabling entrepreneurship, embracing diversity and inclusion, supporting financial well-being, and delivering quality education and skills development, so that together we can do great things every day.
We all want to preserve great moments in life, and this is made easier when trusted hands lead the way, opening doors so we can venture out to explore possibilities, refusing to believe the undoable, but always embracing the unthinkable. Inspired thinkers always glued to the possibilities of great futures, embracing challenges with admired hope. A group of good people ready to give you a push as they create, build, and support platforms that steady our feet. Because we believe in new creations that are embraced by all, and changes that make life much easier to handle. This wonderful change is meant to connect our futures, because we understand in life the things that you desire the most are within reach when we unlock possibilities for you to do great things every day. Call us today on 0711 065 100.
Have you ever thought about the word mutual? Mutual respect, mutual admiration, mutual interests, mutual benefits. It's a little word with big meaning because it describes a state of commonality, of shared experiences or beliefs, and of close relationships. For us at Old Mutual, the word mutual is much more than just a part of our name. It's a promise we make to those we serve. Through our core business activities of gathering capital, investing it on behalf of our customers, and transferring risk, we are working to create a more socially inclusive, resource-efficient, and low-carbon future for all our stakeholders. And it's this that makes us the first choice financial partner for millions of Africans. We understand what is important to people and businesses on the continent and what challenges they face. And they trust us to help them overcome those challenges, protect what is important, and transform their dreams into reality, while constantly evolving how we deliver on our purpose and keep our promises. The reason why we do it is the same today as it was almost 2 centuries ago: to become our customers' first choice to sustain, grow, and protect their prosperity by offering a range of integrated financial services that truly meet the needs of our customers throughout their lifetime, enabling entrepreneurship, embracing diversity and inclusion, supporting financial well-being, and delivering quality education and skills development, so that together we can do great things every day.